Good morning and welcome everyone. It is Friday, November 10th, 6 a.m. So 30 minutes before the open of the market. My cleaning crew is still here. So if you see or hear a lot of noise in the background, I apologize. But it's been a quiet week so far, and we're not really expecting anything different today. So unless we're opening up really drastically different this morning, we'll probably have some time to answer some questions. If not, I'll answer the questions at the aftermarket session. So let's take a look and see what's going on. And we'll go over to the futures. Okay, so it looks like we're up somewhat. Actually, we're bordering on significant here. We're about 40 basis points, 0.4% on the S&P and the Dow. Nasdaq about a third. So actually pretty close to 0.4% also. So we are definitely opening up, but that is not too surprising given the day that we had yesterday. So yesterday in the S&P 500, we had this large bar downwards. We went from basically the MA90 almost all the way to the MA50. That's really big movement for a single day, especially compared to the other 3-4 days before it. We did get a more significant volume, almost reaching the moving average of the past 30 days. So this was more of a significant movement downwards. Now, we didn't breach this consolidation range, and I don't really expect us to breach the consolidation range today. Given that we're up, well, that's a reaction to this huge movement that we had yesterday. It would seem like that we have a positive bias, especially going into the market. And let's see how that develops. Let's actually get a chart of the ES going. Okay, so overnight we traded down, and then it's been in the last couple of hours is where we had this really strong surge movement upwards. So there's no doubt that we're going to open up higher this morning. The question is, where is we going to go from the open? So it feels like that we could move upwards and then create a bull trap and start moving downwards. I really don't expect us to break this range, the MA90 and MA50, given that we have the Veterans Day weekend, and Veterans Day is tomorrow, but a lot of places are, not entire shops, but a lot of traders, institutional traders and money managers are taking the day off. So today is going to be almost like the day before a holiday. So it's almost like if we had Veterans Day on Monday and Monday was going to be completely shut down, you're going to have mostly the junior traders trading today. Now, it's not going to be as extreme of an effect as if we had that actual holiday on Monday, but that effect is still going to be there. So given that we've had really muted volume all week and limited range, I really don't expect that to be any different today. So it'd be very surprising if we break out above the MA90 or below the MA50 today. What it really feels like is going to happen is we've got our, so I still have, these are labeled wrong. MA90, what is this? This is the MA50. Okay, so I still have our blue lines from our moving averages. We just need to add our purple lines. So we're going to put that right about there and make that purple. So that's the lows of yesterday, the lows of the pre and post markets, and then the highs of the pre-market, which is, so it looks like we're tracing back down a little bit today. And did we have a consolidation range? We have many consolidation ranges right here and right here. Okay, so what it feels like is going to happen is we're going to open up higher, that's for sure. There's going to be a little bit of a gap up, and most likely we might start moving upwards. Let me add this one right here. There's a consolidation range, the upper end of this consolidation range yesterday, and another one right here, it looks like. Yes. So we can move up towards one of these lines right here. I really doubt we'll hit the MA90. That would completely undo what the movement that we had yesterday, which was a pretty large bar compared to the entire week. So I really don't think we'll get up to the MA90, but we could hit one of these purple bars lines up here or come close to it and then start moving downwards. That would be a bull trap. Now, there's no guarantees that that will happen. That's just my personal feel of what a high probability chance of what might happen in the morning. So if you see that going up, don't get too excited. What you're going to want to watch out for is at each of these purple lines, can it continue? Can it continue? Do I see volume? Do I see momentum of it moving upwards? Or do I see a slow grind upwards? If we get either of those two, yes, it can continue. But if you see spikes and then pullbacks, or you see strong volume or strong bars downward, then that's going to be a bounce off of one of these bars and we'll start heading lower. Again, do I expect it to break this MA50? No. Do I expect it to break the MA90? No. So it's really just a consolidation range. So we're not going to get too excited. We're not going to expect what we got yesterday. The only thing that we have on the books right here is this consumer sentiment. And normally, yes, consumer sentiment gives us a clue to GDP. And by itself, yeah, it can move markets a little bit. But this week, given that we've been super light on news, we've been super light on earnings, we've been super light on just about everything, consumer sentiment might move the needle a little bit more than usual. So you definitely want to watch out for 10 a.m. Eastern, 7 a.m. Pacific. So I'll mark that right here. Just expect that we might get a bit of volatility here or directional move right around this time. So just be careful. If you decide to day trade today, then watch out for all these levels that we just talked about. Personally, I wouldn't be day trading this week. You're probably bored out of your mind. So, except for yesterday. Yesterday, you got a little bit of action, but only at specific times. So there was this sharp movement right here at 10 a.m., that sharp movement downwards. And then between 11 and probably around here, right here, 12. Yeah, 11 and 12, Powell was speaking. And so we did see volatility and then a continuation of that movement downwards after Powell spoke. So what happened? What did Powell say? Powell said that that we're waiting and seeing, but we're not ruling out continued rate hikes. And so the market didn't like that. The bond market didn't like that. This was a bond auction, right? And that's actually what today's question is about. So let me just make sure that there's nothing really else to look at this morning before I go on and answer that question that I received. VIX. So VIX could really consolidate or spike up a little bit if we move downwards. If we start, so let me throw VIX on here. So I do want to watch VIX today because VIX will give us a clue of what could happen in the SPY as well. So if we start seeing VIX pop up, then we're going to watch out for the market starting to come down. If we just go sideways, then we're just going to have this consolidation walk. And if we see it move down towards these lows right here, then we could see a little bit of movement upwards. But you see how VIX is, there's a very limited range for it to go down unless it's going to break below the normal range that we've had all year. So that's really unlikely. So there's not really a lot of catalyst for the S&P 500 to move significantly higher and above that MA90. So we're really looking at a muted range today. And bonds. Let's take a quick look at bonds. Bonds moving up. similar to the S&P 500. So after that big sell-off yesterday, bonds have basically recovered completely, which is really interesting. Okay, so that gives room for the market to move higher. And let's go back and take a look at our S&P. So it really does look like this is a strong movement upwards. It's got some momentum to it, so I won't be surprised if we start hitting this 437.6.5 or 437.5 level, but I really don't expect it to go much above that. For that, MA90 really should hold. Okay, so let's get to the question that we had yesterday. So we comment that there was a big movement at 10 a.m. yesterday. That's true. That was associated with the bond auction. And we read an article that mentioned that bond yields rallied due to a disappointing treasury auction. And can I expand on what happens to bond yields when a bond auction does not meet expectations? Yes, absolutely. So let's see how we're going to do this. Let me get my draw pad. That'll probably be a little bit easier. And let's start sharing. Let's do a whiteboard. Okay, so let's just say I'm investing in bonds and I buy a bond that is, so I buy a 30-year treasury. Okay, I don't like that at all. Let's do a Word document. Okay, so let's just say I invested in a 30-year treasury, and I bought it at auction, the previous auction, which was only, I'm not sure if they're doing weekly auctions or monthly auctions right now. I think they're doing them weekly, but let's just say 1 week ago. Okay, 1 week ago, I bought my bond at face value, which was $1,000, and they are offering let's just say 5.75%. And then this week, we go to auction. And so the US Treasury tries to sell this another 30-year Treasury. You have to pay $1,000 for it. That's the face value. So when you buy it at auction, it's always $1,000. And they say, hey, we're going to offer it at 5.75% again. And no one bids. So the Treasury still needs to raise this money. So if no one bids or if they don't sell enough at 5.75%, then they're going to go, okay, fine. What if I gave you 5.8%? Okay. And maybe a couple more people buy it at 5.8%, but the Treasury still didn't raise all the money it needed to raise. So they'll say, fine, how about 5.85%? And some more people buy at 5.85%, and they still didn't raise enough money, so Treasury goes 5.9%, 5.95%, a few more people buy, and then at 6%, that's starting to look good to people in the market. And so now finally at 6%, they sell all the bonds that they need to. They raise all the capital that they needed to. Okay, so that means that the 30-year US Treasury just popped up to 6%. Okay. When we're talking about bond yields, we're always talking about pre-existing bonds, not new issuance. Okay. So the new issuance is obviously here at 5.60%. Okay. So my treasury that I bought a week ago, I paid $1,000, but I'm only getting 5.75%. So if I want to sell my bond that I bought, I can't sell it at $1,000 anymore because someone would say, well, why would I buy your bond when I can just go over here and buy the new bond and get 6%? Plus, yours is a week old now. It's not, well, actually, it would be fine. We haven't received a coupon payment yet. So a week ago is fine. So the nominal value is still the same. What we need to do now, if I want to sell this bond, is I need to start lowering my price to 980 or whatever it is. I'm not going to do the math right now. But if I lower my price, it's as if I got a higher yield. If I pay $1,000 and get 5.75% back on my money, then I get what is this? I get $57.5. Okay. So what is if I what at what dollar value does 5.75 or $57.5 equal 6%? Okay. And so my value of my pre-existing bond has to drop. Again, I haven't done the math, and I guess I could do the math real fast, but we're pre-market, so I'll do the math in the aftermarket. So my value has to drop enough so that my yield here is at least 6.0% before anyone is in their right mind is going to buy this bond from me. And therefore, what happened? Prices went down, my yield went up. Okay. And so that's what they mean, that when an auction doesn't go well, then it doesn't go well, meaning that people aren't buying enough bonds. And so they're having to raise the return on the bond, the coupon rate on the bond. And that causes bond prices to drop, existing bond prices to drop, and existing yields to go up. And that's what we saw yesterday at the auction. I'll just do it on TLT because it'll be faster. So prices went way down, and then if prices went way down, then the yields went up. Okay, so hopefully that was clear. And if you guys want, I'll do the actual math calculation in the aftermarket session. So we've got about 13 minutes before the market opens. We'll just do a real quick check in on the SPY. And we're just chopping. We're chopping right now into the open. So just watch out. We're probably going to be trading in a very limited range today. If anything, again, also we're going into the weekend. So there's going to be hedging activities. So that will be more downward pressure than upward pressure. So if you have any positions that have profits, you might want to take profits during today's session before the weekend, or hedge. Or if you're very comfortable with your positions and you think that you want to hold it over the weekend, then just do that as well. So I'd be a lot more comfortable with holding shorts over the weekends than I would with longs over the weekends, though. Okay, so let's go ahead and get ready for the market to open, and I will see you guys in the after session.